Hello and welcome to my channel Wonders of Price Action. This is the press conference by Chair uh, Powell. This press conference was done on the 1st May after FOMC. Now I'm not giving you the total, but the things that are concerned to our uh, forex pairs, USD stance. Now, first of all, today the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. I will have more to say about monetary policy after briefly reviewing economic developments. Now, here it has been told that they are not okay. Now move on to the other side where now we have here. Now where do we need to see the important things that relate to the. Now here we have that I wanted to show you from. Here we have the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.5 and quarter to 5.5%, and to continue the process of significantly reducing our securities holdings through a slower pace. Over the past year, as the labor market tightness has eased and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain. However, we remain highly attentive to inflation risks. Now, we have stated that we do not expect it will be appropriate to reduce the target range for the federal fund rates until we have gained greater confidence that inflation is moving sustainably toward 2%. So for this year, the data have not given us that greater confidence in particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for federal funds rate for as long as appropriate. What does it mean? Means they are not going to cut the interest rates for which everyone was waiting for, everyone was expecting. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. It means not recently they are going to cut the interest rate. We are also prepared to respond to an unexpected weakening in the labor market. We know the reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal rate, the committee will carefully assess incoming data, the evolving look, and the balance of risks. Policy is well positioned to deal with risks and uncertainties that we face in pursuing both sides of our dual mandate. we will continue to make decisions meeting by meeting. Okay. Now, until until this part of the press conference, the stance of the Powell of the Fed is tightening of the monetary policy. Now it comes to give it some easing. How? Let us see it. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our security holdings consistent with plans we released previously. Now, what are they going to do? They are withdrawing the money from the market. They are absorbing the money. But what are they absorbing? They are reducing it. Means they are managing the restrictive policy, and it is being moderated. How? Specifically, the cap on treasury redemptions will be lowered from the current 60 billion per month to 25 billion per month as of June 1. What were they withdrawing money from? Treasury redemptions, there were 60 billions per month. Now they will absorb only 25 billion per month as of June 1. Consistent with the committee's intentions to hold primarily the treasury securities in long run, we are having the cap on security agencies. Now, what are they going to do with those agencies? Unchanged per month, and will reinvest any proceeds in excess of this cap in treasury securities, with principal payments on agency securities currently running at about 15 billion per month. Total portfolio will amount to roughly 40 billion. Now, previously they were withdrawing 75 billions, and now totally they will absorb the money from the market, that will be 40 billion. It means they are managing the not cutting the rate. So this is bearish for USD, and that was bullish for USD both. Now what is happening? The decision to slow the pace of runoff does not mean that our balance sheet will, okay, that is in detail. We were concerned with these two things. Now this is a moderated policy, though they have not uh, cut the rates because everyone was expecting it to be cut, but rather they are, what are they doing? During the quantitative easing, what the money was supplied to the market, they are absorbing that money. They were absorbing 75 billions per month, but now they will absorb only 40 billions per month. Now you may understand what the effects are expected on this, on the economy, on the USD price, on the USD pairs. Now those will be coming in the with technical analysis. This was the explanation of the FOMC meeting through press conference. Okay, like my this video, subscribe my channel. Thanks for watching. Bye for now. I'll be coming in the next video with another analysis. Bye.